Good morning. It's Thursday, August 14th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So we got a lot to cover here and a lot to unpack. So let's get started. You've got a broad-based, kind of a muted overnight session here in some of these markets. And really the volatility is going to pick up as soon as we get some economic data coming out here later on today. Now, yesterday in the Metals Edge, we identified two different levels to watch here. The first in gold was 34.23. In the overnight session, we got up to 34.23.80. I also mentioned a point on the silver market up at 38.80, and we got up to 38.78 in the overnight session. So you could see that by using the tactical ranges derived from a multi-factor model along with a comprehensive chart pack, you could pinpoint some of these essential areas of support and resistance, and that approach enables you to layer on more positions and manage your trades more effectively. So become a client today. Receive the chart back by registering the link in the description below. Now, looking at the stocks here, the Russell has surged significantly this week with stocks at record levels, and volatility has dropped to multi-year lows as traders now fully anticipate a basis point move here from the Fed following Tuesday's inflation report. Now, overnight, stocks are pausing their advance as investors are really waiting for new economic data for clues on how aggressively the Federal Reserve might cut rates. And it's that aggressiveness that's really important here. And we can get into that in a second. Now, looking at these markets here, one of the questions I get all the time is what are the strongest markets on the future side and what are the weakest ones? And that's where a lot of traders will start to look at positioning in that direction here. So if you look at the multi-duration time frames, the strongest markets, well, they've been Bitcoin, they've been Ether, the S&P 500, and feeder cattle recently. You look at the weakest markets out there, it's natural gas, corn, wheat, and the volatility index. Now, yesterday's top performers in the futures markets were mostly cryptocurrencies, with Sol up 6%, Ether up 4.75, and Bitcoin up 2.73. So the cryptos were on fire yesterday, and it was really, if you looked at small cap cyclicals and interest rate sensitive equities, they really ripped higher as the rates markets really priced in those interest rate cuts from September. And one thing I tell you guys always to watch is the CME's Fed Watch tool. Real easy, just Google it, bookmark it. It's something I pull up every single day. And what stood out about yesterday was, yes, you had this 93.6% chance of a 25 basis point interest rate cut. But what happened was we saw the 50 basis point cut line start to come back in. So you have a 6.2% chance of a 50 basis point cut at that September meeting. Now, the probability of that working out, well, that's going to come into a lot of things because of the fact that we're seeing Treasury Secretary Scott Bessent, who's not a Fed official, not a voting member in the Fed. He is urging policymakers to use the September meeting to kick off the cutting cycle, saying that we could go through a series of rate cuts here, starting with a 50 basis point interest rate cut in September. Well, San Francisco Fed President Mary Daly, she pushed back against that need for that size of an interest rate cut, saying 50 basis points would just issue panic in a dire situation in the markets, and we're just not there yet. Yes, the Fed is behind the curve. Do they need to do 50? Most likely not here. So you look at the dollar index, edging just ever so slightly higher. We had some data come out from the Bank of England. We also had the European Union, a lot of different economic data come out overseas. We saw the pound continue to lift up. We've got a little bit of weakness in the euro currency, a little bit of weakness in the Swiss franc, the Mexican peso, the Canadian dollar. All these are variables into the direction of the dollar index as it's a basket of currencies that's held against it. Now, the inflation print that we saw that came out, that July CPI, well, I believe that will most likely mark some kind of short-term bottom that's reported in inflation, and we will likely accelerate on inflation at year end. And if you look at the gold market, well, gold, it's issuing some kind of warning out there with the somewhat dismal response we saw following the CPI print, with gold futures anchored on either side at 3,400. You look at the overnight range, 34.23.80. We got down to 33.89.20. So really just $20 above, $20 below here. And if you get the tactical ranges, you'll see that you have a higher low and you have a lower high, which means that market is really consolidating at the moment. You look at the Silver market, well, that's looking much more constructive. And you look at the gold silver ratio falling to 88 to 1. You actually have this inverse. If you take that 39.91, you see that little slam down we have. You see that consolidation sideways. We probe lower. We hit the support level outlined on the chart pack. We had two levels of support that came in. I told you 37, 50 to 40 is really your critical level of support. And then we've got a trend line coming up. Well, now the market's bouncing back up, consolidating and looking to push and build on yesterday's momentum higher. So the probability of the chart pattern setting up as an inverse head and shoulders, well, we're going to have to keep an eye on that because we could see that $40 in the marks. Now, we're not getting much love here from the copper market. A little bit of an upswing here in platinum and palladium. Palladium has really been one of the weaker ones recently, and platinum has been holding kind of a short-term trend line as well. You shift over to the crypto market. Standard Charter, they had increased their base forecast for Ethereum to 7,500 by year end. You look at Ethereum in the overnight session, sitting right at 47.84, up about 20 bucks here. You got Bitcoin futures pulling back about $1,000 at the moment. You've got a little bit of weakness in the NASDAQ, and there is a correlation between those two, the Bitcoin market and also the NASDAQ, as a sentiment of risk on, risk off. But really, we're seeing ETF demand and the flows really go into the Ethereum market here. And if you just look, just a couple days ago, the funds, they pushed about 524 million of net inflows with 6 consecutive trading days going into Ethereum, and massive inflows in that. In Standard Charter, they expect Ethereum's broader application of scope spanning decentralized finance, tokenization on smaller contracts to really help it outperform the Bitcoin market over the next 18 months. And in 18 months, I've seen forecasts as high as $25,000 on Ethereum. So remember, there is a futures contract on that, which makes it very efficient to use and utilize somewhat on the leverage side of things too. But remember, futures and option trading, it does involve risk of loss, especially when you're using leverage here. So you want to manage that leverage effectively. Define your minimum position, define your maximum position. And I often tell people, what is the point where you're going to start waking up and looking at this thing, really having emotions following your position and things like that? That's chances are your position sizing is too big. And that's the number one problem that I see many clients have here, is that position sizing, getting that wrong here. You want to start with your minimum position when you have very little emotions on it, and then start to tack on or accelerate in different ways by adding on to that position. So looking at Europe and Asia, with European stocks, they did edge higher, while Asian stocks, they declined. And it was really more comments by Treasury Secretary Scott Bessent. He said that the Bank of Japan was behind the curve on inflation and will likely need to raise interest rates. So that triggered the yen surging here. And that's where you saw the MSCI, the Pacific Index, it fell about 0.5%, snapping its 3-day win streak. Now, we're going to have that economic data today, and I said that that's where you're going to get some volatility in the markets. So call this the calm before the storm here, because you're going to see some big shifts. And the problem with the inflation data, forget the CPI data, because a lot of times inflation, it starts with the producers. So today's data is likely going to confirm that U.S. businesses are absorbing most of the costs here when it comes to the higher tariffs, and that companies have absorbed about 64% of the tariff costs through June. And that comes from from a report that was put out by Goldman Sachs I was reading last night. And they expect that these businesses to really pass through some of those costs here in the coming months. So you're seeing producer price index for the final demand is expected to increase 2.4% year over year in July. That's about 1/10 of a percentage point higher than June. It's the core, which excludes food and energy. That's expected to increase 2.9% versus 2.6% previously. You'll also have initial claims, and you're going to have the continuing claims data come out. So a little bit of employment data will come out, and that could move the markets just a touch. But remember, define your position sizing, use the chart pack, use the tactical ranges, and you'll be able to come and pinpoint. You can pinpoint some of the highs, some of the lows in those markets by using that multi-factor algorithmic tool. And then also the chart pack should be able to lead you in the direction that we are biased to on these particular markets. So you got any questions, give me a call or shoot an email to info@bluelinefutures.com. And remember that futures and option trading, well, it involves risk of loss, and it may not be suitable to all investors. Good luck and good trading.